Congratulations on your upcoming retirement. During this video, we will review the pages of the retirement packet that was emailed out to you. This video will help you make decisions about which insurances you wish to continue in retirement. There are two groups of retirees: regular retirees, who are 65 years old or older, and early retirees, who retire before 65. The first page of the retirement packet is applicable to retirees who are 65 years of age or older at the time of retirement. This page reviews the three different coordinated retiree plans that the state offers and shows the differences between them for retirees 65 and older. Coordinated plans are those which coordinate with Medicare. Medicare pays 80% of the costs of covered medical expenses, and the coordinated plan covers the other 20% of covered costs. Retirees who are 65 or older, now or at the time of your retirement, will need to apply for Medicare Parts A and B. Anyone who is currently 65 should have already signed up for Medicare Part A. Retirees who are 65 or older and still working will only be eligible for Medicare Part B once employer-provided health insurance coverage ends. Retirees who are 65 or older, you will need to apply for Medicare Part B to continue state health insurance as a retiree. For IFO faculty members, employee insurance coverage will run through the end of August, as long as you have worked through the end of the academic year. Your retiree insurance would then begin in September, if you choose to participate in state retiree insurance. Employee insurance for all other retirees will end on the last day of the last month in which you are employed. Your retiree insurance, if you choose to participate in state retiree insurance, will then begin the next month. You have the option, within 60 days of your retirement, to switch from your current insurance carrier to another qualified insurance provider. Please notify HR if you wish to switch carriers, and we will give you a form to complete to make that change. The insurance carrier you have at the end of your employment will be the insurance carrier that you roll into for retirement insurance, if you choose to continue state retiree insurance. You will continue to be eligible to change plans at open enrollment each year after you retire. Retirees who are 65 years old or older will go into one of the state's coordinated plans. Anyone with Health Partners or Blue Cross Blue Shield insurance will go into those insurers' coordinated plans. If you have preferred one insurance, you will go into the UCare Medicare Group Coordinated Plan. Retirees younger than 65 years old will continue on the Minnesota Advantage Plan as a retiree, if you decide to continue state health insurance after retirement. Whether you are in a coordinated plan or the Retiree Advantage Health Plan, you will be directly billed by the insurer for your monthly premiums after retirement, as you will no longer receive a paycheck from which premium deduction are made. The next forms in the PDF packet are for those employees who have additional life insurance for themselves and are under age 65. Retirees under age 65 who have additional life insurance will need to complete the first form. You will need to indicate whether or not you want to continue additional life insurance after retirement. You will be directly billed for the additional life insurance at your current monthly premium rate by the insurance carrier. You will be eligible for a paid-up 15% life insurance premium when you turn 65, if you continue paying your monthly premiums through age 64. This means that you will be able to receive a policy valued at 15% of the lowest amount of additional life insurance coverage you had for the 5 years preceding your retirement. Example 1. In this example, you had $100,000 of life insurance for the last 5 years before you turned age 65, and made all of your premium payments during this 5-year period. Then you will have a $15,000 policy when you turn 65 that will cover you for the rest of your life at no additional premium. Example 2, an insurance premium less than $100,000 at any time during this 5-year period, until you reach age 65, would result in a lower benefit. Let's say at age 60 your coverage was for $50,000, then your paid-up policy would be only for $7,500. If you have additional life insurance, you will need to complete this form and return it to HR with your decision marked to either continue or waive your additional life insurance in retirement, along with your signature and the date. HR will then complete the HR portion of the form. You need to fill out the beneficiary information on the back of the form regardless of whether or not you want to change beneficiary information. The next form is for retirees who have additional life insurance and are 65 or older. If you are in this category, you will need to complete this form indicating whether or not you want the 15% paid-up life insurance policy. If you waive the policy, your additional life insurance will end after your retirement. Eligible participants who have additional life insurance must complete this form and return it to HR with your decision marked to either continue or waive your additional life insurance in retirement. Remember to sign and date the form before returning it to Human Resources for processing. You need to fill out the beneficiary information on the back of the form regardless of whether or not you want to change beneficiary information. The next form is for employees who had additional life insurance for spouses. Employees with additional life insurance for spouses can also get a paid-up 15% insurance plan for spouses who are 65 years old or older. If your spouse is under age 65 and you continue paying your monthly premiums through your spouse's 65th birthday, when your spouse turns age 65, they will be eligible for a paid-up 15% life insurance premium. Retirees whose spouse is already 65 may qualify for additional life insurance on their spouse as long as the spouse has been insured for the 5 years prior to your spouse turning age 65 or for 5 years prior to your retirement if your spouse is already 65 or older. Your spouse will be able to receive a policy valued at 15% of the lowest amount of additional life insurance coverage they had for the 5 years preceding your retirement or your spouse turning 65. Spouses with additional life insurance will need to complete this form, indicating whether or not you want to continue this additional life insurance after retirement. Return this form to HR. You need to fill out the beneficiary information on the back of the form regardless of whether or not you want to change beneficiary information. The next pages contain information from SEGIP on continuing insurance after retirement. Read this information carefully. You will need to complete a form called a Request for Continuation of Coverage form. This form is found at the end of the PDF packet you received by email. This portion of the packet also reviews your ability to change insurance carriers within the 60 days prior to your retirement. Medicare and how your insurance interacts with Medicare is also discussed. If you are 65 years old or older, or will be at the time you retire, you will need to apply for both Medicare Part A and Part B. If you are 65 or older, you likely already have Part A. Part B is only available after your employer-provided coverage ends. You can apply for Medicare Part B as early as 3 months prior to your retirement. You must apply for Part B in order to be eligible to continue state health insurance in retirement. Prescription drug coverage is covered in the retiree insurance benefits if you enroll in state retirement health insurance. One important thing that this document discusses is that if you choose to not continue state health or dental insurance after retirement, you can never get back into state health or dental insurance unless you are rehired in a benefits-eligible position with the state. The information also provides options for continuing life insurance, both basic term life and additional life insurance. The next portion of the packet covers the monthly premiums that you would pay as a retiree for insurance. The first table shows health insurance premiums for the current year. The premiums are based on age and the insurance carrier you select. Other factors to consider for those retirees 65 and older include whether you have single or family coverage and the age of the people you have covered on family plans. Health insurance costs for the retiree include Section 1 and, if applicable, Section 2 to cover eligible family members. Retirees 65 years of age or older will have reduced rates because you will be on a coordinated plan with Medicare. Retirees under age 65 will have higher rates, as you will be paying for the share of the premiums that the state contributed for you when you were employed. Rates for spouse or child run coverage will be in Section 2. The cost for insurance will be less for a spouse 65 years of age or older, as they will be on a coordinated plan with Medicare. A spouse under age 65 or children under age 26 who need coverage will increase the premium cost because they will not be eligible for Medicare. The total cost of Section 1 plus Section 2 equal your total monthly health insurance premium costs. The second table shows the monthly dental insurance premium costs. Costs will differ based on family or single coverage. The third table shows life insurance costs. Add the cost of insurance from each table to find your total cost for continuing insurance. You will have an opportunity to continue the basic term life insurance that was provided by St. Cloud State University. The next section of the packet reviews your options to continue the basic term life insurance in retirement. The amount of the monthly premiums is listed on the monthly premium rate schedule in the previous section and depends on your contract/job type. Most employees, whether IFO or non-IFO, have basic term life insurance, have been provided this benefit at no cost by the state. The amount of coverage you have varies based on your contract and income level. Your basic term life insurance covers you only while you are employed unless you choose to extend it. You can choose to extend this basic term life insurance in retirement at the same level of coverage that you had as an employee for 18 months after your retirement. You will be charged the monthly premiums for the continuation of this coverage. At 18 months following your retirement, you will have the option to convert this term policy to a whole life policy. This would cover you for the rest of your life. The insurer will contact you with information on the cost of converting to a whole life policy and how to convert your policy, should you choose to do so. You can also continue child life insurance for children under age 26 in retirement. The next section of the packet discusses continuing your pre-tax benefits after retirement. This document specifically discusses the medical/dental expense account and options for continuing that plan if you currently participate in the MDEA. The next section of the packet lists contact information for the coordinated health insurance plans. Remember, these plans are only for employees age 65 or older. The Minnesota Advantage Plan will not be servicing this benefit. Another company will provide contact information for these plans. This section gives you the Medicare website and contact information for the Minnesota State Retirement System. MSRS administers the general pension plans for most classified employees. MSRS also administers the Healthcare Savings Plan, or HCSP, which a portion or all of your severance pay and or any early retirement incentive you may receive may go into. Next, you will find contact information for SEGIP. Once you retire, you will contact the retirement specialists for any insurance issues that you can't resolve directly with the insurance carrier. The next section of the packet is information on the Healthcare Savings Plan, or HCSP. A portion or all of your severance pay and or any early retirement incentive you may receive may go into the HCSP. The separation calculator that you received will indicate if some or all of your payouts will go into the HCSP. The HCSP is a tax-free plan. Because of that, there are IRS regulations that govern what specific uses money from the HCSP can be used to reimburse for. Certain eligible medical and dental expenses, including health and dental insurance premiums, can be reimbursed from the HCSP. It's important to remember that the HCSP never pays any bills directly. You must pay for eligible medical/dental expenses out of pocket and then request reimbursement from the HCSP. If you have recurring expenses, like a monthly health insurance premium of $700, then you can show MSRS proof of that recurring expense, and MSRS can set up a recurring disbursement for you, so that they will send you $700 automatically every month to reimburse you for that expense. There are different investment options for the HCSP. You can set up or change investment options through either creating an online account through the MSRS website or by calling MSRS. Website and phone number contact information is listed in the HCSP section of the packet. At the end of the HCSP information, there is a list of expenses that are always eligible for reimbursement, including health and dental insurance premiums and Medicare premiums. The next page lists expenses that are only reimbursable with a doctor's note or a prescription. The bottom of that page lists expenses that are never reimbursable. Please note that this includes life insurance premiums. The next section is a notice of credible coverage. You will only need this notice if you plan on leaving state health insurance and want to purchase Medicare Part D in the future. If you are staying on state health insurance, it includes a prescription drug benefit, so you should not purchase Medicare Part D. If you are leaving state insurance, however, you will need this notice for Medicare. The next section of the packet is the retiree insurance booklet. If you decide to continue with state health insurance as a retiree, you will receive a booklet like this every year, just as you have a current employee benefits booklet. This booklet will come to you by mail and will include an open enrollment packet. Just as you currently participate in open enrollment every year as an active employee, you will also participate in open enrollment every fall as retiree with state health insurance, which would give you an opportunity to make changes to your insurance coverages if you wish to do so. As a retiree, however, you would complete open enrollment by mail through the packet instead of online. As you can see from the first page of the retiree insurance booklet, SEGIP schedules open enrollment meetings exclusively for retirees every year at multiple locations around the state. Just as we have open enrollment meetings for active employees, these meetings provide retirees with a chance to ask SEGIP representatives questions about insurance coverage and any plan changes. Please review the retiree insurance booklet. It will give you detailed information about health insurance coverages in retirement. The next section of the PDF packet is the university's emeriti policy. This policy reviews information on the privileges and responsibilities that come with emeriti status. If you wish to request emeriti status and are a full professor, submit a letter to the president requesting emeriti status through your dean. Your dean will start a personnel action processing form and submit your request letter up the approval chain to the president's office. If you wish to request emeriti status and are not a full professor, ask your supervisor for a recommendation for emeriti status. The next section of the PDF packet is information from 121 benefits. If you have an HRA or MDEA account, please call 121 benefits at the contact information listed on the bottom of each page of the 121 benefits document to check on your balances in those accounts. When you retire, you must either use up all of the funds in your HRA account by your last day of normal employee state health insurance coverage, check with HR if you are unsure of what your last day of coverage is, or you will have to elect for either the COBRA or alternative to COBRA HRA plan. The COBRA HRA plan will allow you to continue using your HRA funds for 18 months after the end of your regular employee insurance coverage, but has an administrative fee. The alternative COBRA coverage will allow you to continue using your HRA funds for the remainder of the calendar year and has no administrative fee. To participate in either the COBRA or COBRA alternative plan, you need to contact 121 benefits and have them send you paperwork to participate in that plan. If you do not elect COBRA or the COBRA alternative plan for the HRA, any unused HRA funds are lost. If you have an MDEA account, you will need to either use up all the money in that account before the last day of your employment. Otherwise, you will need to elect on the request to continue coverage form to continue the MDEA. SEGIP will contact you to determine which of the two MDEA continuation options, which are discussed on page 25 of the PDF packet, you would like to use to continue MDEA participation. If you do not elect to continue MDEA participation, any unused MDEA funds are lost after the last day of employment. The next section of the PDF packet is a general retirement checklist for employees at SCSU to review. The next section of the PDF packet is a personnel action processing form. Please fill out the top part of this form and check the box for retirement along with emeriti status if you are requesting emeriti status. You should initiate the retirement process by sending a letter to your dean or supervisor advising them of your intent to retire, and include the personnel action processing form with that letter. If you are requesting emeriti status, make sure to include that letter as well. Your dean or supervisor will need to forward the personnel action processing form up the approval chain as quickly as possible in order to process your retirement. The final section of the packet is the first page of the request for continuation of coverage upon retirement form. Please fill out this form, beginning with your name, last name, first name, and then middle initial, state employee ID number, and the other information requested in Part 1. When you reach the spouse information in Part 1, fill in spouse information if you have a spouse who is a dependent for any of your insurances. Do not fill in spouse information if your spouse is not a dependent on any of your insurances. When you reach Part 2, fill in the requested information as to whether or not you and/or your spouse are eligible for Medicare. Please be sure to enter the effective dates for Part A and B if applicable. Please fill out your current medical insurance carrier. If you are changing carriers prior to retirement, please enter the new carrier you will be changing to. If you want to continue state health insurance for yourself after retirement, mark yes for continuing single health insurance coverage. Mark yes even if you want to continue family coverage, you will still need to answer yes to single in order to continue family coverage. Then answer the subsequent questions about family coverage to determine whether you will be continuing family coverage. If you don't currently have family coverage, answer no. In Part 3, answer questions about continuing dental coverage. If you want to continue state dental insurance for yourself after retirement, mark yes for continuing single dental insurance coverage. Mark yes even if you want to continue family coverage, you will still need to answer yes to single in order to continue family coverage. Then answer the subsequent questions about family coverage to determine whether you will be continuing family dental coverage. If you don't currently have family coverage, answer no. In Part 4, answer questions about continuing life insurance coverage. Mark yes if you want to continue basic term life insurance or manager life insurance coverage for 18 months after retirement. Mark yes if you want to continue child life insurance. Mark no if you do not have this insurance. Mark yes if you want to continue optional employee additional life insurance. Mark no if you do not have this insurance. Mark yes if you want to continue optional spouse additional life insurance. Mark no if you do not have this insurance. Please note if you have optional additional employee or spouse life insurance, you will need to fill out and turn into HR the relevant forms from the second section of the packet, even if you do not want to continue optional additional life insurance after retirement. In Part 5, mark yes if you want to continue using the MDEA account past your last day of employment. Mark no if you do not have the MDEA. Sign the box marked signature of employee, and then enter the date next to it. Then submit the request for continuation of coverage upon retirement form, along with any optional additional life insurance forms if you have any optional additional life insurance, to HR. You can submit by scanning and emailing the documents to Human Resources at sdcloudstate.edu, or by interoffice mail, or by dropping off in person at HR. HR will review the form and contact you if there are any boxes that were missed. HR will then sign off on the form and submit to SEGIP to arrange for your insurances to either continue in retirement or end appropriately. Please contact HR with any specific questions you have about this retirement packet.